Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the Forex markets. So yesterday, as you could see, market actually has started the new year, but close to the end of the session, market has returned back to the price from it started at the open. And in general, the overall context that we have on the daily chart still stands valid, as market has not broken through the top. So this makes short-term trading relatively easy task, because to consider the long entry on the euro currency, we need to see either completion of some continuation patterns or retracement to some valuable level. So we discussed these levels, 121.15. It's first daily support. So that agrees with the daily average solid area. That makes this FIB level attractive to consider the long entry here. Either for the bulls, if you would like to buy euro, you need just wait and see the breakout of the top. So if market will break through this top, and it will be the clear signal that market is going higher by the few reasons. First of all, here we already have cut the wash and rinse of this top. So if you remember, this is actually XOP of this ABCD pattern, and this is the wash and rinse of this top. So wash and rinse already has happened. So the second return back, it will be from a technical point of view not rational from the perspective of the just stop scrubbing, because they already have been grabbed, and return could be treated only as the upward continuation. Finally, and the second is that actually the patterns that we have here right on top, this is bearish grabber, the engulfing pattern that we have discussed, will be destroyed. So indeed will mean that market is going high. So from that standpoint, it is also possible to consider using the stop buy order on the moment of the breakout of this area. So these two possible ways to act, they are not mutually exclusive. As usual, you could combine them. So for example, if market is going higher, you could place stop buy order that will be triggered only if market will return at the backup, and wait for a pullback and see what will happen. So for a bearish trading, actually we still think that downside retracement is still possible, because as I said, to erase the bearish context, market has to move above it. That hasn't happened yet. This first moment, second moment, if you'll take a look at the Great British Pound, you could see that here is more dramatic. Price action, market finally hits the targets that we have specified at the end of the previous year. So you can see this is butterfly, this is XOP. So both of them has been hit yesterday, and market has formed a bearish reversal candle. Usually this type of action leads to a bit deeper retracement. We understand that the Great British Pound is a bit different compared to the euro, but currently it stands in relation to the United States dollar. And it could happen that both currencies, the price action in the nearest few sessions could be the same. Markets are waiting for Congress hearings. That will be on the 6th of January. Markets are preparing for a non-farm payrolls release. That's promised to be not really very good. So we see what will happen. But this type of action suggests that probably here also could be a second leg on the intraday charts. From that standpoint, we could consider on the 4-hour time frame chart, take a look, we have the evening star has been formed here on this attempt to go higher. This was erased fast and market returned back up. Now market is showing minor pullback back in the body of the pattern. Usually, as you know, the engulfing patterns, evening stars, taking the shape of kind of the ABCD pattern to the downside. This is normal type of action. Period divergence that we discussed here is still valid. So currently we do not see yet any reasons to deny the idea of the possible deeper retracement. Only if market will break top of this consolidation, as we said, we will change our short-term view. Currently, chance on the deeper retracement with the patterns that we have in place still holds on the market. Ultimately, even a bit later, maybe we consider this possible head and shoulders. I don't know how the situation will turn. It is the next step. But currently, we're just watching for reaction on this recent sell-off that should happen in the way of the possible deeper retracement. On an hourly chart, it could look like this kind of the ABCD pattern right to the 22 or 8 area. This is OP, the nearest target of this pattern. So let's see how market will play it out. and then we will think about the next step, what to do here in euro currency.